As of 2025, Tether remains the world's most widely used stablecoin. With a market capitalization of around $110 billion, it functions as the go-to digital dollar for countless crypto transactions, especially those involving Bitcoin and Ethereum. But one persistent question still looms: is every USDT truly backed by an actual US dollar? This isn't just skepticism. Following the collapse of Terra Luna in 2022, trust in stablecoins has become one of the crypto industry's most pressing concerns. In response, Tether released its Q1 2025 financial report, claiming to hold over $560 million more in reserves than the total USDT in circulation, suggesting the company is over-collateralized. Its reserve composition appears relatively conservative. About 84.1% is held in cash and short-term US Treasury bills, assets considered extremely safe. The remaining portion includes 3.5% in gold, 1.8% in Bitcoin, and various loans and other investments. What's particularly noteworthy is the scale of Tether's US Treasury holdings, an estimated $115 billion, accounting for roughly 1.6% of the entire US short-term Treasury market. For a private company, that's an astonishing amount. But here's the real question: how much of this can we actually trust? So far, Tether has published regular attestation reports, reviewed by accounting firm BDO. However, these are not full independent audits. They simply confirm that the numbers match, without verifying the underlying assets in depth. Meanwhile, the US government has passed a sweeping new regulation known as the Genius Act. Under this law, stablecoin issuers must hold reserves only in cash or short-term US Treasuries, and are required to undergo a comprehensive audit at least once a year. This poses a challenge for Tether. Roughly 16% of its current reserves, such as gold, Bitcoin, and corporate loans, do not qualify under the Genius Act. To comply, Tether has announced plans to issue a separate, US-compliant version of its stablecoin. But whether that move will be enough to rebuild confidence remains to be seen. Tether is no stranger to controversy. In the past, it faced legal action from the New York Attorney General over undisclosed reserve shortfalls, and was fined by the Commodity Futures Trading Commission. At one point, it was revealed that just 2.9% of its reserves were actually held in cash. Today, the key issue isn't just how much Tether holds, but how transparently and responsibly it reveals that information. Is Tether truly as solid as it claims? Or are we witnessing the quiet beginning of another crypto trust crisis? In the end, the decision, like the risk, is ours to weigh.